Welcome to The Explainer. We're all about breaking down big, complicated topics into something you can really wrap your head around. And today, we are diving headfirst into the world of cryptocurrency trading. So you've probably heard all the buzz, right? New coins popping up, crazy market swings, a whole new language of jargon, and if you felt kind of lost in all that noise, trust me, you are not alone. But don't you worry, because today, we're going to cut right through it and give you a super clear path to get started. All right, let's jump in. Here's the game plan for today. We're going to start with the absolute fundamentals. Then I'll walk you through how to make your first trade. After that, we'll look at a few different trading styles, get real about the risks involved, and wrap it all up with a playbook for trading smarter.
Okay, first things first. Before we can trade anything, we need to build a solid foundation. I mean, what even is crypto? Let's get into it.
You can think of it like this. It's digital money, but it's not controlled by a single bank or any one government. And that decentralization is the key. It means that the value of something like Bitcoin or Ethereum is decided by a huge global market, not just the economy of one country.
And the magic that makes all of this work? That's the blockchain. It's basically a public record book that everyone can see and that can't be changed. Every single transaction is a block that gets locked onto a chain, creating this super secure and transparent history that holds the whole system together.
Now here's a really important difference we need to talk about. Trading versus investing. Yeah, they both involve buying low and selling high, but it really all comes down to time. Traders are in and out, playing the short-term market swings. Investors, they're in it for the long haul, sometimes holding on to things for years, even decades.
So now that we've got the basics down, let's actually put that knowledge to work. We're going to walk through the practical steps of making your very first trade. And you'll see it's probably a lot more straightforward than you think.
And this lays out the whole process perfectly. You start by picking a platform you can trust, you get your account set up, and then you move some of your regular money, like US dollars, onto the platform. Then you buy your crypto. From that point on, it's all about keeping an eye on the market and, whenever you're ready, moving your money back out. Simple as that.
Awesome. So you know the what and the how. But now you've got to decide, what kind of trader do you want to be? Because your strategy, well, that's going to shape your entire approach.
First up, we've got day trading. This is the fast lane. The whole idea here is to make money off of tiny little price changes by jumping in and out of trades within hours, sometimes even minutes. It takes a ton of focus, and you have to be ready to cut your losses in a heartbeat.
Next, there's swing trading, which is a little more relaxed. Swing traders will hold on to their assets for a few days or maybe a few weeks. They're trying to catch one of those bigger market swings or trends. This style is less about staring at your screen all day and more about doing your homework to predict where the market's headed.
And finally, you've got position trading, which kind of blurs the line with investing. This is the long game. You're holding on for months or years because you truly believe in the long-term value of a project. You need a lot of patience to ride out the crazy market swings, but for a lot of beginners, it's the least stressful way to get started.
Okay, everybody take a deep breath. Before you even think about putting a single dollar into this, we have to have a serious talk about the risks. Honestly, this is the most important part of our whole explainer today.
And this quote right here, it says it all. The crypto market is still really new, it's still evolving, and it is famous for these huge, unpredictable price swings. The potential for a big reward, well, it comes with the certainty of high risk.
So these are the three big ones to really burn into your brain. First, the market is incredibly volatile, which means prices can shoot up or crash down without any warning. Second, the rules and regulations around the world are still being figured out, which creates a lot of uncertainty. And last, but not least, you've got hackers and scammers who are always a threat.
Now, listening to all those risks isn't meant to scare you off. It's meant to prepare you. It lets us build a much smarter approach. So let's wrap this up with a playbook for success.
What's really interesting here is that these principles, they aren't just for crypto. This is the foundation of smart financial decisions, period. Be patient. Don't just chase the hype. Diversify your portfolio so you don't have all your eggs in one basket. Only, and I mean only, risk what you can truly afford to lose. And finally, try to look past the day-to-day noise and keep your eyes on the big picture.
So, if there's one thing you take away from all this, it should be this. Success in a market this wild isn't about getting rich quick. It's about discipline, it's about patience, and it's about committing to always keep learning.
because in this game, your knowledge is, without a doubt, your greatest asset. Thank you for watching. If you got something from this, please like the video and support the channel by clicking on the subscribe button. That really helps us. Thanks again,